Mike, I know you don't specifically cover HSBC, but I do want to ask you a little bit about this. It's 4% of the workforce, not a huge amount, but still 10,000 jobs is very substantial. Does HSBC need to rethink its strategy and potentially become a China bank once more?
Well, I think all banks globally need to rethink their strategies. This is a slow revenue growth environment, whether you're in the U.S. or outside. And in response to slow revenue growth, what do you need to do to control the bottom line? Control expenses. And one way you do that is with technology. So you need to, the biggest benefit of technology at banks is in the non-technology space, and that comes down to headcount. So you're seeing that at other global banks too. So whether it's 10,000 jobs here or 10,000 jobs there, we think in the U.S. specifically, there will be 200,000 less jobs on Wall Street and U.S. banks over the next decade. So that's not just a U.S. phenomena.
200,000. So essentially one major global bank less in terms of numbers of employees. You could put it that way when you think HSBC employs just over 200,000. Now, you did come out with a 244-page Fintech or bank and tech report. I didn't read all of it, I will say. But banks have constantly been renewing their technology and upgrading. Why is now the time for mass layoffs due to technology?
Well, look, we think this is going to be the decade of banking and technology like never before. You're going to see a swap, bots for bankers, the biggest capital for labor swap in history. And you're seeing it because customers are ready for technology and the technology's there. So you're seeing it in artificial intelligence, big data, cloud, digital banking, electronic payments, faster processing. And the tone at the top of these banks hasn't moved as quickly as it should, but the message has gotten to the CEO and the boards that you need to adopt to technology, do it faster, because if you don't do it, everybody else is doing it at the same time. And the other point is why technology now is, necessity is the mother of invention. And with that top line revenue growth being so sluggish in the US and globally, you need to find ways to cope with that. And the way to do that is to use technology.
Mike, it's going to be a huge week. Good morning, by the way. Huge week for bank earnings. Yet banks are not trading on anything like the multiples of tech companies at the moment. What are those earnings going to have to deliver for the multiples to go up of US banks? Why won't they trade like tech companies in terms of the multiples they enjoy if they're such big investors?
Well, first thing I'd say is with our 6-month project, and we worked with 9 senior tech analysts at Wells Fargo Securities in the research group. One surprise is, U.S. banks spend $150 billion a year on technology. That's more than any other industry. So first I'd say if banks aren't getting their money's worth out of technology, then maybe they should spend less on technology, or maybe those technology companies better make sure that the business case is sound. Having said that, what we think will happen, and the business case for banks to continue to spend on technology is very simple. Revenues grow faster than expenses, whether revenues are strong or revenues are weak. So you will have bank earnings starting next week. We're likely to see sluggish top line growth. So then the question on the conference calls, which I'll participate on, is how are you going to make sure that revenues grow faster than expenses? Oh, and guess what? If managements can't do that, then there's a question either with the business model or management, because that's their job. And one way to get that job done is with technology.
Got to have those positive jaws, as they say. Mike, Vonnie asked a question a little bit earlier on about China and HSBC, and whether or not it should become a China-focused bank. There have been rumours floating around. We broke a story a few days back about the fact that the administration is considering portfolio flows limits, all kinds of different aspects of the way that China and the US interact on a financial level. How will that affect Wall Street banks?
Well, look, it's harder to be a global bank. I mean, you see regulation in the U.S., you see regulation country by country by country. So the overhead costs, the compliance costs, have become much more cumbersome to be a global bank. So if you're not best in class in a certain region, you need to rethink your strategy. This goes back to a few decades ago. Stick to your knitting. Stick to what you know and what you're good at. Otherwise, reconsider about exiting markets. And by the way, I go to the annual meetings for Citigroup, the most global of the U.S. banks, saying, hey, why don't you become a little less global also? Why don't you sell your Mexican business to somebody else? Why don't you focus more on what you're best at even if, say, Mexico and Citi's case is good, or in the case of HSBC, maybe they're good in some markets, but let's double down where you're doing the best job.
So just explain a little bit more to us what you mean by the fact that technology will account for at least 200,000 fewer jobs in banking in the future. Do you mean that, for example, roughly a fifth to a third of the back office staff will be reduced, of staff in places like call centres and corporate headquarters? Or do you mean that banks will go into other lines of business, fintech, blockchain, certain types of cryptocurrencies?
Well, I think we have the cause and effect backwards in that question. I think, look, because of fintech, because of blockchain, because of technology, banks are in a position where they can go ahead and reduce the back office staff, reduce the number of people in branches and call centers and elsewhere. Look, if you're a bank, and this is over many years, you don't just flip a switch and have this happen. If you're at a bank and you're advising or consulting a customer, if you're dealing face-to-face with the customer, okay, that's fine. If you're dealing in technology or you're a technologist, fine. But if otherwise you're in an area that can be automated, banks should go ahead and automate it. And by the way, this is win-win-win. So for the customers, their lives should be easier because the banks should be able to anticipate their needs a lot more. For the employees, instead of doing all that mundane administrative work, you have more time to talk to the customer. And for the banks themselves, they should become more efficient. In fact, we think U.S. banks will become the most efficient in history over the next 4 to 5 years.
So, Mike, who is ahead of the game here? Because obviously everybody is on top of this to some extent, right? You have an outperform rating on Citi with a target of 69.08, Bank of America at 29.17, and JP Morgan at 117.69. Who's out ahead in terms of technology and the future?
Well, look, Goliath is winning. As you know, I was on, Bloomberg earlier this decade saying break up the banks. The last 3 to 5 years, you've really seen a sea change in terms of performance. So, Bank of America and JP Morgan, they're leading the way when it comes to the use of technology to make banking easier for customers. Citigroup, they have the most room to improve, so we still recommend Citigroup, but the largest banks are the ones with scale have an advantage now more than ever before. And take notice, the BB&T and SunTrust merger, which should close over the next month or two, what was the number one reason they gave for pursuing that merger? They said that they could have more scale to make technology investments. This is the theme of the day.
Mike, the irony of all of this is that if you talk to people in Silicon Valley at the moment, in the epicenter of the global tech landscape, they will tell you that Wall Street banks, well, they're not exactly flavor of the month right now as a result of some of the IPOs that have not gone well. And there's a move towards direct listing. Can I ask you what effect it would have in aggregate on the major US banks if Silicon Valley and the tech community decided to go a different way on IPOs?
Well, I mean, Silicon Valley is coming. That was in the JP Morgan annual report in 2014. Jamie Dimon said that. So Silicon Valley is coming, whether it's for IPOs or zero commissions or fintech or pick a range of areas. And those are some of the overall threats that are depressing revenues. And you should see some of that, when banks report next week.
Mike, the repo market story as well. I'm curious as to your take on that. How do you see that one playing out? There's likely to be another squeeze towards the back end of the year. What caused it? Did it cause consternation on Wall Street? Does it affect your numbers?
It has not impacted our numbers right now. It seems to be not life-threatening, but I think we all need to be in a heightened state of awareness. I mean, these things have happened, at month-end, quarter-end, and year-end. Well, when it happened recently, that wasn't any of those. So that raises some issues. There could be some secular factors behind it. You have quantitative easing, and that's still around here. You have fiscal policies, you have geopolitical risk. So I think it makes the whole system a little bit more flammable, and hopefully central bankers are on the job, and I think the message has gotten to them, like everyone's on the scene watching a little more closely than before.
You do say in your report, and I should mention as well, that there will be some additions because of technology as well, right? I mean, imagine security and, hacking staff will have to be ramped up and so on.
Absolutely. Well, again, if you deal with customers, banks are ramping up with that. If you're dealing with technology, banks are ramping up with that. And if you're dealing with cybersecurity, you have a job for life. I mean, that's if you're in college right now and you major in cybersecurity or get your PhD in that, that will be around for a long time to come. And so, look, as a bank analyst or as a banker, everybody needs to be a little bit part tech analyst. So as part of my transformation, Vani,
I'm always nervous. Can I just jump in and say when a guest brings in a plastic bag, but you're going to finish your point, and I think that's why you have a plastic bag with you.
Yeah, well, I've tried to hide the plastic bag, but I will do my transformation in front of your eyes now. So look, every bank analyst, every banker needs to be part techie. And I don't really know how to be exactly.
Oh, wow. Okay, he's getting up, so.
So we're getting up here.
So
this is part of my transformation, okay, from banker or bank analyst to part techie. So, Vani, you're going to have to help me.
I feel like we maybe need music at this part of the.
So this is the transformation from bank analyst to techie.
So that's what we can expect on the calls.
So in other words, so now here's my my hoodie to be a little bit more part techie. It's symbolic here more than anything else that bankers need to understand tech, because if they don't understand tech well enough, they will not succeed in the decade ahead.